Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, April 7th, 2020. We're looking at the Euro Pound on the 4-hour time frame this morning. It is actually late morning, early afternoon here in the United States. We are pushing above the highs here from the open. All right, just barely, right? Lots of candles to the upside and then a giant move to the downside. Here we go. We're moving back up. We take out that high, we touch this high, outer band is present, completing the stop hit pattern, got in on a slight retrace. I'm not going to go any lower than where it's coiling up right here, because when the market tends to coil like this, you'll see that highs are made, lows are made, and then those highs or lows are just breached. So I expect to see this low breached. However, I'm not going to expect to see the very extreme low breached, okay, unless it gets there. But more often than not, as the market coils, you'll see this type of an action take place, where it never really exceeds the bounds of the extreme highs or the extreme lows that were originally set forth. Okay, so let's take a look at one other item of interest. We have, since setting up our entry, we have seen a 4-hour candle here, 4-hour candle here, and now we're on to the third 4-hour candle where the price has been above the original entry. And that is important, especially to new members that have the biggest question, first and foremost, is always, how do I trade every candle close? If I have to sleep, if I have to go to work, I can't always check my mobile device. I can't always check the website to see in the forum who's posted what. So this is what I have tried to start highlighting, is the amount of time where the market is, generally speaking, at or better than the original entry. Okay? One other point that I want to make here is this total that you see right here. This is the 2020 total for this pair on this 4-hour time frame. Okay, the Euro Pound on the 4-hour time frame since January 1st of this year. That's how many positions were profitable. Now, your positions are going to differ in size depending upon what your stop loss is. Okay, so if your stop loss is $100, that means your take profit is going to be 2 times that, which will be a $200 profit, which is 2 to 1, as you see right here. In this example, we have, here is the entry, here's the stop. That value is always going to, we'll call it X, is always going to remain the same. Therefore, that value will be a multiplier of 1 to the 1 times profit and a 2 to the 2 times profit right here. So there's 1 unit, 2 units. So whatever this unit size is right here, you can double that, and that'll be 2 positions. So so far this year, 9 positions times whatever your stop is. So if you had a $100 stop, okay, then you had, whoops, hard to draw with the mouse, you have $900 profit, okay, on this pair this year. Okay, so that's kind of how that works. If your stop loss was $150, you can take that 9 positions times 150. That's how we calculate it. That's how we keep track of it. I've had a lot of folks email me with questions on that are not obviously members, but we're just questioning how we came to this, what this value actually means. Okay, so we'll talk to you guys soon. Welcome back, everyone. It is now Tuesday, late morning. It's been approximately 24 hours since we recorded the first video here with the stop hit that took out this high. And remember, I discussed that this low would probably be reached first, and then a stall form there. Okay, and exactly what's happening right now. It doesn't quite reach this low. Okay, we're starting to see the wick, we're starting to see the bullish candle, and so what's entirely possible right now is that this is where the market reverses. Maybe we'll get a engulf here, and we can buy another stop hit. That outer band is right there. Okay, so that is why I'm careful not to trade to the second low when you see these small inner windings where the market tends to coil up between 2 outer opposing, a high and a low. Okay, we kind of fall short there, we take it out, we fall short here, take it out. This is where it might reverse. Okay, maybe this time, maybe this run, it'll take out that high. You don't know. So you have to just be cautious. You have to go with what you tend to see. This is what I teach. This is how it generally happens. So what are we looking for now? Well, we're looking for the engulf, okay, to buy. We're looking for possibly this candle to spike back inside of this breakout line and fall, okay, and close back below. It could either be a 1 candle spike, or maybe we'll engulf, not quite taken out enough to qualify as a engulf here, and then maybe we'll fall back below the line with something like this, and that'll be a break check. Okay, maybe it'll just be a one candle check where we check to see if it's going to hold, fails, closes back below. Maybe we'll break back inside. Okay, not quite engulf enough to be an engulf. Okay, and then an inside break check will form here. There's a lot of possibilities. The majority of our patterns form at breakout lines. Okay, not all of them, but a vast majority. So that's what we're looking for. If you guys like what you see, come over to TradeForexForProfit.com. Check us out. The link is below. We have a lot of free information there. And when you're ready to join, there's a link there to join the members area. We have a live forum, a lot going on for you guys. I hope to see you on the inside soon. Have a great week.